Tesla drops to $622 a share this morning. The market was down 800. Is it time to panic or time to buy more Tesla shares? This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So as you know, Tesla stock price perhaps got as low as $620 this morning and has nicely recovered. The question mark is, where do we go from here and why? There are sort of three components to this. One is to review generally what's going on in the marketplace currently. The second component is specifically to review how Tesla reacts to that. And the third is to sort of make some comments about where we're going after this. So what's the first sort of component of this is that we're now in a realm of investing trading called bot trading. What that means is a robot is doing the trading. So there aren't actually money managers. They program their computers. Those computers will quickly do things, for example, dumping large amounts of shares. If there's bad news or if there's a run downward, they'll be inclined to sell first, ask questions later. So the way the bot world works is that the bots are programmed to sell quickly if things look crazy. What then happens is the managers get more involved with the investing process to determine if, in the case of a certain stock, the downdraft that we're seeing in the general market was appropriate for that stock, in which case they'll stay out. But if it was inappropriate, they may choose to buy back in as a way to take advantage of lower prices that you might be seeing. So in today's case, it's our argument that that's exactly what happened with Tesla. The sort of the numbers that we'll see when it comes to earnings are kind of known for Tesla already. So I think the company is really in a solid position, short-term and long-term. And so what we believe occurred is that there are a lot of value managers out there who are looking for, if you will, discount opportunities to buy more shares of certain companies. Apple comes to mind, Tesla, look at the usual suspects. So this situation is kind of complex, and I wanted to use one example. I mean, we could talk about lumber prices being down 40%. We could talk about a whole bunch of things. But I specifically wanted to look at what's going on with oil right now, because oil affects everybody, including Tesla. Think of body panels. All the manufacturers they deal with have oil as a component. So what was just announced by OPEC was that they're actually going to be increasing production. Why? Well, the price had gotten up to about 75 a barrel. And the problem that popped up for OPEC is that anytime the price is significantly above $50 a barrel, there are a whole bunch of frackers or people who use fracking to produce oil whose cost basis is around $50 a barrel. So when the price is running 75, there are a lot of these companies that are now able to profitably start pumping oil, and that starts to affect the market share of the Middle Eastern entities that have very low cost of oil. You'll remember last year, as part of COVID, what they did was they lowered the price of oil almost down to $12 a barrel, and that very low price bankrupted a large number of fracking companies and therefore allowed prices to bubble back up with a lot more market share going to the Saudis and other entities in the Middle East. So one of the drivers for the sell-off that's been discussed is certainly the increase in inflation. And interestingly, the increasing oil price, which represents 2% of everything, has been part of the inflationary updraft. So as we have these folks getting together and lowering the price of oil, we now have some relief from the inflation pressures that we've been getting. And in theory, this could roll across a lot of industries. Now, what's kind of crazy about the situation is, what if oil, for example, rising was affecting inflation, and all of a sudden OPEC and others decided, we're going to drop oil prices by $10 to $20 a barrel, trying to get to that $6.50 to basically put the frackers out of business. Now, the issue that comes up is it turns out that 25% of the companies that are on the stock market are oil or oil-related service companies. So anytime the price of oil rises dramatically, their prospects actually improve, and definitely their profits improve because they're selling at higher prices, better margins, etc. So what we're then looking at right now is the fact that when 25% of the companies in the market are starting to drop in price, that drop in price can affect everybody, even the companies that are not impacted by those dropping oil prices. So I think we're in an interesting period right now where obviously everyone wants to figure out what's going to happen. But just like last year, I believe that if COVID rolls in, you not only have the oil entities impacted, but the other issue is that if people fly less, if there's less of everything because of COVID, we all of a sudden go back into somewhat of a COVID economy. So everything drops initially, and then everyone looks around for entities that are benefiting from whatever is going on with COVID. In particular, an example of these groups would be, look at the cruise companies. They're trying to get going again, and they're doing all vaccinated people on their ships. But now if we have the Delta variant coming in, and that's resulting in masking up and shutting down again, those are an example of the stocks that are going to get hit. So who else gets hit when this happens? Certainly the airlines do. Certainly the shipping or cruise ship entities. But you could also have hotels, and all the people that service those hotels also have their stock prices hit by a dearth of tourists in those facilities. So the idea that I was trying to do with this is sort of reach in and be very specific about the stocks and organizations that have been negatively impacted by what's going on right now. But the idea is, once you understand how it's possible that there are certain people that might benefit, for example, Zoom and some of the heavily sort of over-air delivery of news and information in classes, et cetera, versus the cruise companies where people can't get on those ships. And the airlines and cruise companies could be affected greatly if this whole thing reignites into similar levels that we saw last year. So my argument today is that when you have a slice of the market, i.e. oil companies, where their profits aren't going to be rising as much, where there's incentive for people to use less oil, you could end up with those guys losing a lot of revenue profit. And as they lose that revenue profit, their stock prices go down. And so the job or the process of the market is for everyone to immediately jump off the building and assume the worst, make sure everything is okay for them to come back, and then return to the market. And I believe that's what we're seeing currently. So as you'll note, I was actually on the phone with one of our Patreon supporters reviewing something, and he was sort of panicking because of the 622 low he saw in Tesla. And then I pointed out that, it's legitimate to be concerned, but Tesla actually did very well during the pandemic. And what will actually happen in many cases is you'll have the bots sell out. And yes, you could have the same managers who sold out through their bots rebuy in. But what you can also have happen is there are money managers with cash available that are targeting certain companies when they're discounted in these downdrafts. So the value investors might swoop in and pick up shares while others are selling. And that's one of the reasons why you'll notice down below we have Peter Lynch's book, One Up on Wall Street, to understand great fundamentals in terms of investing and selecting companies that are doing well in certain circumstances with which you could potentially make a great deal of money if you're willing to step in and buy when others are not. What do I expect to happen going forward over the next few days? I think I think there's something you might call sector rotation, where people are rotating out or selling the entities that are going to suffer because of the new conditions that are being brought about. And then we rotate then into entities that continue to do well in this environment. And so I'm watching Apple, I'm watching Tesla. There's a bunch of companies that fit this profile, and all of them may be entities for you to consider buying because, yes, the market is going to tank as certain people like oil companies or airlines lose a lot of money as people expect things to get worse. But how can you get yourself into a position to make money on the entities that did well during the pandemic and will do well if we have a rebirth of the pandemic during this year? I guess one other entity that I've been studying throughout this whole thing is what's going on with people, Winnebago and some of those companies. I've been amazed at some of the stories I've heard about, no discounting, hard to find spare parts. Everyone unable to do travel internationally or whatever is just getting a Winnebago or something of that sort and traveling on the road. And so you're seeing a lot of fill-ups in terms of people deciding to, move into these spaces. So that might be something to consider as well. What do I expect from Tesla? I would say if the market does its recover like it is now, we end up in the 650s, maybe 660s today, Monday into Tuesday, and then we start doing this little routine again when everything gets pulled down towards the end of the week by market makers pinning the stock is what I'm expecting to occur. But we'll definitely keep you posted on what we learn. I don't think it's a good idea to panic right now because I really think we're into a sector rotation where there's a lot of cash out there that needs a place to earn a return. And what people are doing is rotating to sectors where they're confident they can make money versus having their money sitting in places whose stock prices are falling rapidly because their business fundamentals are coming apart. So we'll figure out what's going to happen here and keep you posted on that. This is kind of a brief show today, so we'll just close out and say thanks for joining us. We do have a few SpaceX shares if there's interest. Also wanted to encourage you to not go to bed within 4 hours of eating, minimum 2 hours from a health standpoint. And we have a list of our other health recommendations below on the channel. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehithro, Hebrew, Choda Hafiz, Farsi, Strassi, Russian, Ni Hao Ma, Chinese, Konbanwa, Japanese, Hey Do, Swedish, good day, our friends in Australia. And in Jamaica, we say, enough respect, walk good. Thanks for joining us and have a good day. And bye for now.